Hi there and welcome to Dukascopy TV. Today I'm joined by Secretary General and co-founder of CIFA, Jean-Pierre Diserens. Welcome, Jean-Pierre.
Good morning.
So looking to fixed rates, which you say are a manipulation of the free market. We've seen it lately in regards to the price of crude oil. So could you explain it a little bit further?
Well, I think, it's not only crude oil. It's interest rates, it's exchange rates, and the latest demonstration of the effect of that manipulation was the debasing of the Swiss franc. What is interesting to see is that the Swiss franc is not the only currency that is based. If you look at the US dollar environment, Asia, China, they're all pretty much pegging their currencies towards the US dollar. If you look at Europe, you have Denmark, you have Czech Republic, you have these countries that have not joined the euro, but that are within the eurozone, that are pegging pretty much their currency towards the euro. So these effects are market manipulations. And what was interesting was the debasement of the Swiss franc, and it showed clearly that the market did not agree with these manipulations. The crude oil is the same, pretty much the same symbol. If you look at what happened to crude oil that was up to 100 and who knows many dollars per barrel, and then suddenly it can come down very, very drastically to $40 a barrel, with exactly the same market conditions, then you have to say, well, there is somebody that is playing something, and that game has a purpose. Now, what is the purpose of the game of manipulating? When you look at the markets, then you realize that the manipulation is done by governments, mostly. And there is an encouragement by certain governments to bring currencies, commodities, prices to a certain level, and suddenly to bring them to a different level, to debase them. And that certainly is something we will observe more and more, because the markets in an economy that is suffering such great problems. I mean, if we look globally, we could say the Bretton Woods Agreement are at their end, and we're working towards a new economy, which nobody really knows what it's going to be. And these debasements, these market manipulations, are here to give the impression of a certain stability. And then suddenly you take it off, and the stability is broken. If you look at the currencies, once all the currencies that peg themselves against the US dollar will stop pegging themselves against it, and it will happen gradually. What is going to happen to the US dollar? I think that's a good question.
It is a good question, but I'll ask a different one. What would happen when the market is no longer being manipulated?
Well, then the regular market forces will take over. Then you will recreate the real market, and the pricing will be according to the reality of things. If you look at oil, oil is a beautiful example. Oil, there's no shortage of oil production. In the 80s, everybody was predicting that we would run out of oil by 2020. Now, every year we progress, every year we realize there's more oil reserves, there's more potential to have oil. Therefore, why was the price of oil at $100 a barrel, one with productions that were way above consumption? That is a question because money was floating into commodities for safe haven. And once they realize it's no safe haven, then they pull out and we come back to a normal market price. So we have to observe these mechanisms, and what we have to do, because we're wealth managers and we are here to protect our clients, if possible, anticipate them, or at least take them into account as a risk factor, so that once the debasement comes, like with the Swiss franc, which was a beautiful example, and a lot of people lost a lot of money, but everybody knew it was coming, but nobody wanted to believe that it was coming. We have to watch out, especially when we trade or deal in commodities or currencies that are being manipulated or that are pegged. To me, it's the same, so that we can protect our clients and protect them from very significant losses at certain point.
So you say we need to watch out. So what areas do you think are likely to be manipulated in the future?
My big concern are the interest rates. Because if we see what happened to the Swiss franc, which is it's a currency, but it's a fairly insignificant currency. If we look at what happened to the oil and the shock wave it sent through the markets, now we all know that the interest rates are being manipulated significantly with all the non-conventional approaches to dealing with the deficit of the governments. Can you imagine what's going to happen once the interest rates come back to regular market condition and take into account that countries like France, Italy, Spain, well, we're not going to talk about Greece, but Germany too are technically bankrupt. And if you have money, would you lend to a bankrupt corporation at the under zero rate? I don't think so. So at one point, we will have to become more sensitive to reality and look at the potential of these entities that are taking our money for nothing without any guarantee whatsoever.
Well, thank you so much for your insight today, Jean-Pierre. It's been a pleasure having you in the studio.
It's always a pleasure to come back here and have these little chats with you. So thank you for having invited me again.
That's all from Jean-Pierre and myself for now. Thanks for tuning in, and remember to keep clicking back to Dukascopy TV. Bye for now.